Hello traders, welcome back to the channel. This is Genoa with Trading the Charts Pro. Guys, I'm back with one more video, and in this week video I'm going to be breaking down the overall price action that took place in the market today, Monday, January 10, 2020. We're going to look at the good news, because actually if you understand how price action really works, then you would see that, hey, today, though it started off pretty bad, it turned out to be a very good day, guys, for at least two of the indexes. So we're gonna break them down. I'm gonna share my thoughts on what I'm expecting price action to do in these upcoming weeks, how you should be looking at the charts, man, and how understanding the structure of price action can actually help you make money in the markets. All right, so that's why I'm here. I'm here to bring a different insight to the way you analyze charts. All right, so we're gonna start off with S&P 500. Guys, we got the S&P 500 chart up. I'm gonna do a quick review of my thoughts from last week and how did the market really react in terms of that analysis that we did last week. All right, so guys, last week video we talked about S&P 500 is still in an uptrend, right? But we said last week that the market typically broke out, or clearly broke out of this sideways box that it was in, and we were anticipating that the market could have done two things, right? The market run up and it could have pulled back to the top of the box, right? Bounce and continue to move higher. That was the first thought that we had, and we said clearly that if the market doesn't bounce off the top here as expected, then we'd look for a break back down for the market to come back down to the uptrending support, which we see the market has laid out a uptrending support from the bottom here, bounce off this very same uptrending support here, which is a higher low. Again, we bounce here off the uptrending support, and what do you know, guys, the market pulled down today, and from the sign of this very long wick right into that area, we can clearly see that this is the bounce. Now, when the market opened tomorrow, which is going to be January 11, 2022, we'll be looking for the confirmation. Does the market continue to move high into this area, continue pushing back up, which would mean that this is a continuation of the uptrend to the upside. All right, so whenever we get a bounce, it depends on your risk level. If you're aggressive, if you're an aggressive trader, which I can be an aggressive trader at times, there are other times when I may be more passively aggressive. So if I'm very aggressive today, based on this bounce, massive buyers came in, increasing volume. Then I started a nice little position here on the long side in anticipation of a move back into this 4,800 level, right? But if you're not as aggressive, then you want to wait till tomorrow and to see, do we get a continuation of this bounce. Now, if you're trading SPX, SPY, when we get the bounce, the confirmation of the bounce, today was actually the bounce, then you go long and you put your stop saying, somewhere down here. If price action reverse, come back down, now you're no longer interested in playing that trade to the upside, or the trade may no longer look like it's going to work out. But as it is right now, last week our outlook was price could have bounced off the box, move higher, or we are going to get a breakdown, pulling back down into the uptrending support of the trend. And guys, this is clearly what we have here today, Monday. So tomorrow we'll look for the confirmation. If we get a confirmation on this bounce, then I'm pretty much looking very clear to see the market start to push back up to the upside. All right, so this is useful information if you are a short-term trader. You trade XPX, you're looking for stocks that mirror the S&P 500. This is a good way to go in and find those stocks that have pulled back to the uptrending support, just like XPX has, and then you initiate a trade and you manage your trade from that point on. All right, so that's it for the SPX, guys. We're gonna move on over to NDX, and guys, for NDX, excuse me, a little stuffy, but Man, for NDX, guys, this chart is, man, if you're a new trader, the number one thing or number one job you have is to spend time. If you've already developed your long-term investing plan, you're contributing to those accounts monthly, and now you want to make money on the short term, your number one job, you got one job, guys, is to learn how to identify predictable, repeatable patterns. Identify characteristics that had played out in the market before, and learn how to predict them based on pretty much past performance, as well as characteristics that you can identify. And in this case, this is very simple, guys. The NDX, which is the Nasdaq, this is a very solid trending market, right? What does that mean for a new trader? It means that, guys, you have to come in, identify what is the support, where is the low risk time to buy in this trend, and then you just be patient. You be patient, you sit back, you wait until that opportunity presents itself. And then when the opportunity presents itself, guys, you move in on it. All right, so in a case like this, NDX moving up, the market was in a sideways consolidation for a little bit, hitting its head on the upper resistance of this, triangular or rectangular square, which just means that the market is consolidating. Now, the market technically break down out of that a little bit, but where did it break down to? It break down back into the uptrending support. And if you are a buyer, just like myself, this is where we come in, just like all the other buyers came in today after NDX gap down, sold off, and then got bought back up and pushed higher, closing the gap to the upside. Come tomorrow, I'm looking for a next bullish candle right here to confirm that this bullish reversal is still in play and the market is looking to move back to its upside. So this is where you buy. Where do you put your stop loss? Well, a stop loss would go anywhere below the bottom of the trend, typically right below the bottom of this wick candle here, and then you manage your risk accordingly going forward. What's the target? Guys, the target is right back up here to the top of this rectangular box, or if you want to stretch it, then you just map your uptrending resistance further up and put your target back closer up to that 17,000 level. All right, so that's it for NDX. NDX is very straightforward. There's no going around, nothing like that to be confused about. The pattern is very clear, the trend is very clear, and when you have a clearly defined trend, guys, you don't want to go against the trend. You just simply be patient, wait for the trend to pull back to the support. When it's at support, we buy, right? If the price action start to break down below the trend, then that's a different story. All bets are off if this thing falls out below the trend. So though everybody's talking this and that, interest rate, yeah, we know it's coming. What is the market price action telling us? The market is still in a trend. Market is pulled back to support. What do? We buy at support. Our risk is below that trend. If it breaks down, then we're no longer to the long side on that market. All right, let's move on over and look at Dow Jones. So last week, as far as Dow Jones goes, guys, we talked about the market just breaking out of this slight wedge here, moving up towards the upside of the resistance, this is uptrending resistance line here. So we said we weren't interested in buying anything in the Dow, not at this moment. We want to see the Dow pull back down, and here it is, guys. The Dow has pulled back down short term right here into this previous resistance level here, acting as support in the short term. Well, we still need to get a clearer bounce, and then when we get a clearer bounce, we have to say, at this point, where can it go? 36,000 to roughly 37,000. Do you like that? If that is enough meat on the bone for you, knowing that there's a probability that things could go south, and this thing can end up pushing on back all the way down to roughly 34,000. Then you take the trade. Personally, I want to see the Dow Jones pull on back down to the support of the trend, which we can see here. Boom, 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 boom. Nice uptrending channel in a way. Yep, this is what I'm looking for. When it comes back down here, then I'll be a buyer. So as it is right now, I don't have anything to do with the Dow Jones Industrial Average at this time, but we'll always come back to the Dow Jones Industrial Average if an opportunity presents itself super quick. All right, Russell 2000. What are we seeing in the price action of the Russell 2000? Nothing new. Same thing from last week, right? Last week Russell 2000 was practically 50% of the way to the resistance and 50% of the way to the support, right? Support here, very clear. Resistance is up here. We're not using this high as a resistance because price action only broke out very shortly. That was a short-lived breakout. Price came back straight down to the bottom of the channel. So we're really looking to see this thing move back to its previous resistance level, which is this one. And then if we get a breakout of that one, given that we may have catch a trade from the bottom, then we can wait to see if price action move back all the way up to 2,458. As it is right now, Russell 2000 is still close to the bottom. So this is where we're looking to pick up some IWM if you want to go along on the Russell 2000. We start buying here. If price action breaks down below 2,100, then we're no longer interested in this to the long side. So the range is really from 2,100 to around 2,350 to the upside. So we'll look to buy the lower end of the range, and then we look to sell to the higher end of the range. Anything in between, we just be patient and just wait for the trend to come back to its support. All right, now guys, I'm gonna move on over and start looking at some stocks that I really like in the market right now. All right, so we talked about finding stocks that mirror the Nasdaq, it mirrors the S&P 500. So the reason why we do a market outlook is to see what is the general condition of the market, general direction of the market. When we understand the general direction of the market, now we know what it's pretty much going to do. So now we go out and we look for stocks that move in the same way that the market does, right? And when we have that, then we know what to look for, right? So basically, given that we've done our market outlook already, we see that the market has pulled back to a nice support. Okay, what do we do with that information? We go out, we look for something that pulls back to support, just like the overall market done, right? It is moving in a very nice uptrend, just like the market, and the market has pulled back to support. Guys, this is a long time winner. Microsoft pulled back just like the market has pulled back to support. We got a solid bounce, just like the Nasdaq bounce, just like the S&P had a nice bounce today. Also, we had increasing volume on that bounce of support. So I'm a long buyer right here for Microsoft. What is the trade? The trade is until we get back to the upper side of this trend, whether to the horizontal resistance right around 3,400, which is 340, not 3,400, 340, are to the upper end of the range. I'm more to the short side here where it's 340. So technically, this trade has shy of 30 points to the upside, right? So Microsoft, nice pullback, nice place to pick it up for a long trade, and I am long right here. All right, now guys, if you like Nasdaq and you want to take Nasdaq to the long side, we've already identified what the charts are doing. Now we come in and we use the ETF of the Nasdaq, which is QQQ. Same thing, Market has pulled back to its uptrending support, bounce off this 337 what 370 level, right? Boom. Where can this thing go? It can push all the way back up into the 400. So roughly at 30 points, just like Microsoft to the upside on QQQ trust. So if you like the Nasdaq, if you like what the chart is looking like, this is where I'm long. We can see we had increasing volume on this bounce off support here today. Where would I no longer be interested in this trade? Well, if it comes back and take out this 370 level, then I'd be a little bit cautious to the downside. But if we zoom out and we look on this thing historically, guys, we can see that typically the 200 SMA, which is the 200 simple moving average, is always a great time to go long the Nasdaq whenever it pulls back into that region. Historically, even before we had this 2019 sell-off, it was pulling back to the 200, and that was a great place to go long. Even before we had this 2020 crash to the downside, it was still pulling back and bouncing off the 200 SMA, and that was always a great place to go long and would always make money. So market is uptrending right now. Nothing has changed. Condition is a little bit more murky, yes, but this is still a good place to go long with QQQ if you like the Nasdaq, and just manage the risk accordingly. All right. A couple other stocks that I still like, or I like right here on this pullback. Another one is Google. This is a big boy play, but this thing is pulling back all the way from 3,000 down to the 200 SMA again, which is bounce a little bit shy of 2,700 region. Price currently at 2,777. If we look at that to the upside, we're just shy of $300, back into the resistance zone. So again, I like this for a long play to the upside, bouncing off support with increasing volume. Tomorrow I'm looking for a confirmation or a continuation of this bullish move to the upside. All right. Next stock that I like, DHR. This is a healthcare stock. When we look at what the market is doing and we look at the stock specifically, this thing is it's in an uptrend. The trend has changed short term to this thing moving in a horizontal sideways channel, and what we can see is we have a clear support, boom, which is roughly 290, and we got a clear resistance, right? So sometimes what stocks will do, they'll move up, then they'll move sideways, and then they'll continue moving up, right? That's just standard in terms of the way price action move. All right, so here we are, price bouncing off support. We had increasing volume on that bounce. I'm anticipating this thing move or continue moving from 300 back into the 330. That's a 30-point move to the upside. All right, and then the last one that I like for the continuation of this week, my data is down, is crowd, right? So let's bring this other chart back in and let's see if we can find crowd. Okay, CR. Okay, so crowd here, boom. Yeah, so let's look at this chart. Let's map him out, boom. So we got a horizontal support level here, boom. Right, where can it go? Max level is around here. So when we look at it, want to be a little bit cautious with this. I like it here because boom, we can see price bounce off this level before, but price came down here, and this is looking like a short-term bear flag. But if this level here continues to hold, this thing can start moving back to the upside. I just saw that this thing kind of broke down below is uptrending channel, right? Because it was in a very nice uptrend. But nonetheless, I do like this here, 180. Where is my max risk? If it breaks down below, 180, come take out back this level here. That's roughly like 10 points to the downside. Then I'd no longer be interested in this trade, right? So, but I do like it right here, with the exception that it doesn't take out 180. But I like the rest that I previously mentioned a little bit more. All right, guys, so this is the end of this video for this week. If you did find some value, please consider subscribing to the channel. Hit the thumbs up button. Throw your comments down below. And guys, I'll see you in my next video. Thank you very much for watching.